Hey everybody, it's me, Gregory Mannarino. I wasn't going to do a video today, by the way. It is Wednesday, December 5th, 2018. However, I wake up this morning and open up my email box, and when I tell you, had to be one of the most epic days I've ever seen. A lot of people concerned about the stock market right now, rightly so, especially after what we witnessed yesterday. I covered a lot of this yesterday in my post-market wrap-up video, and I'm seeing a few things I just want to share with you because I think it's important in this environment. Let's start off with this. Anyone who is not concerned about the distortions which exist within every aspect of this market, I don't care where you want to look, the price action of every asset is not real at this time, and it's just so simple to understand what is going on here and what has been going on for an entire decade, more than that. The fact that we are remaining in a fake environment is hard to deny when we have world central banks, all of them, not just the Federal Reserve. Everyone here in the United States is fixated on the Federal Reserve, but it's all of the world's over 100 central banks that are working in concert, that have been working in concert with their respective leader to create this environment. Let me put this into another perspective real quick. And I've covered this before, but I seem to be getting a lot of new followers who are confused. So let's try to clarify a few things. The 2008 market crash, 'cause that's what it was. It was called a meltdown. This was a global phenomenon. That was the moment, sincerely, in my view, where the system in some way died. And world central banks did everything that they could to inflate bubbles. The stock market bubble that we're in now, a housing bubble that we are in now, that has been, carried on the back of this debt bubble, which is engulfing the earth at this particular time. There's no bubble ever in history larger than the one we are existing under right now, the debt bubble. And world central banks, again, have created this with their leaders on purpose, who want to keep it going. Because, again, no world leader wants this coming down on their watch. How many of you remember? And again, please put politics aside. If you let yourself get blinded by politics, the two-party system, which is designed to keep you off balance, to keep these people hating these people, you'll never see clearly. For months, we heard from our president, who I support and want him to be successful. That's the truth. He was calling the Federal Reserve the greatest threat. Do you remember that? Why was he saying the Federal Reserve was the greatest threat? Because the Federal Reserve wanted to raise rates. That's what needed to be done a while back. And candidate Trump spoke out very strongly against how the Federal Reserve was behind the curve, should have been raising rates. But then for months we heard how the Federal Reserve was the greatest threat because they want to raise rates. Don't you understand? You see it. It's a complete 180. Now again, I understand, and I'm sure you do too, why the president said it. Nobody wants this to come down on their watch, but as I have been explaining for years, the drug known as easy money pouring into this market is now becoming toxic. And we're getting this rift in the yield curve, with the whole entire curve now starting to roll over. Okay, we understand that. The Federal Reserve capitulating to the president 2 weeks ago now was a big letdown to me. I want a real market. We need rates to normalize. People are getting robbed blind and they don't see it. They're accepting returns on their interest earning accounts, like a savings account. Most I would hope, middle class people have some kind of a savings account, but by keeping your cash in the banks, which because rates are being suppressed, you're not earning a real rate of return. It's not even keeping up with the actual rate of inflation. It's a game. It's a terrible game that is being played. So, anyway, what we're witnessing now with regard to the yield curve, flattening out, part of it inverting, looks like the entire curve is going to invert, appears to be a prelude for some event to occur. And it will be like one we have never seen before. Again, this environment of extremes, and I can't stress that another way, maximum distortions across the spectrum of asset classes will correct to fair value. We do not have a free market. We do not have a real market. Therefore, we do not have a real economy anywhere in the world. It's all being propped up on the back of easy money, suppressed interest rates, which has fostered a 100% false environment that people are existing in and believe it's real. These markets have one job. You know what this is if you follow my work. That is to determine fair value. If the largest aspect of this market, the debt market, is not allowed to be real because world central banks with their collective leaders wants the easy money to keep coming, how can anything be real? Everything derives value. Stocks, the value of the currency, also a unit of debt, housing, all of it derives value from what is occurring in the debt market. Most people have no idea that this is how it works, but these are the facts. You don't want to believe this guy? Look it up for yourself. It's a very simple concept, but nobody understands it. You do, and I'm proud to say that if you follow this blog. So here's the situation, and again, the reason why I'm doing this blog is because a lot of people are concerned about what we're seeing, rightly so. Fake market, distortions, which will correct to fair value, because the only job of these markets is to determine fair value. And that's the reason why we get bubbles that inflate and then deflate. That's the market trying to correct itself. World central banks are public enemy number one. And any world leader that pairs themselves with their central bank, wanting them to keep more easy money coming, is also public enemy number one. And it's a shame, but that's the way this is, unfortunately. And again, please put politics aside. Our President Trump, along with every other world leader, they're all on the same page, is literally in bed with their central bank, wanting the easy money to keep on coming. It's always the same thing. We were being scared. Our president calling the Federal Reserve the biggest threat because they wanted to normalize rates. This environment is fake. We need to correct it. Does that mean we're going to get some pain in the stock market? Absolutely, but nothing like what's going to happen when all of these distortions correct to a fair value. The drug, the easy money, the interest rate suppression is now manifesting itself in the yield curve, the rift, the flattening, soon to be a full-on inversion, and that's bad. And I cannot stress that enough. So let's put this together real quick, how this is going to play out here. So, understanding where we are in this cycle, because this is a cycle that has repeated itself. Again, bubbles inflate, bubbles deflate, bubbles inflate, bubbles deflate. We've never seen a bubble this large before. When bubbles deflate, like let's talk about the two most recent ones that probably most of us can understand, the dot-com bubble, people got devastated, the middle class. The last one, same thing. People got thrown out into the street, lost their homes, banks taking them over. Why do you believe the Federal Reserve wanted to reinflate a housing bubble? All of those toxic assets, the housing that was bought up by the banks, well, now they're worth something because the Federal Reserve, who's run by the Wall Street banks, the largest banks on earth, deliberately reinflated the housing bubble. So now those toxic assets are very profitable for them. It's a crime. This was a crime against humanity, in my view, that was perpetrated. But again, nobody talks about that either, but it's a fact. So now that we understand that these markets are distorted beyond belief, literally, beyond even my ability to understand it, because they're just too big. The distortions are too big. We understand that the meltdown is going to be just as big as it has risen to. So it's going to devastate people when this comes. Now, again, you know this. There are no models for this to go by. The Federal Reserve can say all they want. Every world central bank's product is debt. That's it. That's all they offer is debt, and more debt on top of that. So they can talk about models, what they're planning on doing. It doesn't matter. All they want is to issue more debt. And every world leader is on board with it, wanting their world central bank to keep the easy money going, to keep everything propped up. You have to look underneath it to realize what's going on here. It's a grand plan to fleece the middle class. It always is. A wealth transfer effect from the masses to the very few. Most people don't understand that when the markets fall, more cash is made faster than when they rise. You can make money in this market on the long end, meaning that when stocks go up, or on the short end, you bet against the market. This is what all the major banks did during the last crash, and that's what they're going to do again. Traders like myself will do the same thing. So you're hearing it from the horse's mouth. You understand? So the issue before us is pretty simple. We've never been here before. No one knows how fast this whole thing can correct to fair value. I believe it's going to be very rapid. And why? Because the distortions are so great. Everyone is going to run to the door at the same time. Yesterday, the 800-point drop in the Dow, I explained to you why that happened. When people are trying to sell a stock, they offer it for price X. It doesn't sell. They lower the price. It doesn't sell. They lower it again. It doesn't sell. They lower it again. So you get a precipitous drop in the stock price. You understand? We saw the same thing at the opening salvos of the 1929 crash. Also, dot-com bubble. Also, 2008 crash. Same thing. A massive skewing of sell orders with not too many buyers. Now, I want to bring up another thing here. I know this is getting kind of long, but it's important. I do not own cryptocurrencies. You all know that. However, I have played them before. You all know that too. And I made plenty of cash off of it. I'm proud to say that. I blow by blow, I posted it on my websites. I told you what I was doing. I'm not in it now. But I do believe that looking at what cryptocurrencies are doing in this environment gives us a hint as to what may be coming down the pike. I'm referring to risk. I've noticed that cryptocurrency is a relative gauge. It's a relatively good gauge when trying to understand if the market, the stock market, wants to take on risk. And I use it for that purpose. Now, we all understand what's been going on with cryptocurrencies for quite a long time. As of right now, cryptocurrencies are getting punished. Go look at what's happening right now. So to me, looking at this, and again, nothing is absolute. You have to look at everything in context. You understand? This is why this is somewhat complicated. Gauging on what cryptocurrencies are saying in this environment, that they're being bid down right now, this tells me that this market wants to not take on risk and may want to sell off even further. You understand? Looking at what's happening with the yield curve gives us another sign here. Understanding the price action just yesterday. how this market sold off gives us yet another clue. I don't like looking at things with big scary names like Hindenburg omens or death crosses. I don't like them because historically they don't work. 8 times out of 10, these kinds of signs that you hear about that are getting shoved down people's throats, they don't mean a darn thing. And I would imagine most of you traders out here will attest that what I just said is true. However, looking at these other aspects, these other dynamics, how they're playing out in this market, gives us a sign as to what may be coming down the pike. And there lies the concern. And there lies, I believe, what most of you are concerned about. Perhaps you don't look at these things in detail like I do. However, you're not dumb. I think you're able to put a few things together in your head and say, hold on a minute. It may just be a gut instinct, but you see that things are just not right. And perhaps something is about to occur. Now, I don't want to alarm anyone. I'm out here today just answering the questions that I got in my email box. But you have a right to be concerned. And if you do so, if you have an investment or so, there's nothing wrong with calling your investment advisor and expressing your concern. Now, believe me, if you follow this blog, you could run circles around your investment advisor. I am sure. I don't care what. They could have went to Wharton Business School. I don't care. You are more than likely smarter than they are. And I'm proud to say that too, because I have made every effort I possibly can to try to put this together for you, to make you understand how you could have and still can weaponize this market against those that are trying to rig it. Becoming your own central bank, betting against the debt, understanding that the environment we are in is not sustainable and is completely fake, means that it's going to correct to fair value. Are we here now? No one can say that. I can't sit here and say that, but there is concern. Anyone that's not concerned doesn't have a couple of functioning brain cells. That's the truth. Anyway, look, I hope this has answered those of you that have written to me. There is no way on earth I can write back to everyone that writes to me. So that's why I put these videos out, to try to clarify things. And I hope this has done that. If you believe that this video is important, if it answered questions for you, I would always appreciate, as usual, share this video, give it a thumbs up, get it out there. I don't know what else to say. I will see all of you in the morning tomorrow when the market reopens. I'll do another video. We'll try to put this together. We'll try to understand where we are in the cycle. And hopefully you and I will stay on the right side of this trade, okay? With that said, again, I love all of you. Have a great day. I'll see you tomorrow.